Morning, guys. It's Max Convexity. I hope everyone is having a great April Fool's. So far, it is April 1st. I just listened to the Retire on Dividends video. He had a pretty good April Fool's joke on it. It got me for a second. All right, let's look and see. What time is it? It's like 8:50 my time, which is 9:50 East Coast time. In any event, the market has just opened up. Let's see how we're trading on all these stocks. The cash market's just opened up. The futures market's been open all night. Anyway, let's check and see what happened. Last night the cash market was blowing up, but then and it still is. We got a cash, or the future market was blowing up. We got a cash market open above the profit box. Nice job. I just got a comment on Tesla. Let's see if I can find it. I wanted to clear it up. Maybe not. They were asking about the break-even price, and all it is the price that they sold the options for, which is $78. In the letter, they said that they saw something that said $300 in there, and anyway, no, they sold these options for $78.45. The strike price is 18,330. So you subtract 78.45 from 18,330, you get 18,251.55. That's your break even. It's only 3 points of extrinsic, which is not very much. I talked about that a little bit on my show last night. We can get a live update of what the price is now. Let's do this really fast. Well, it's going to be full profit because it's out of the money. I just made it calculated. So 1.2 mil is what they made so far. They lost 50,000 the other day. This will be 7 cents a share collection on the month. So dividend, just ignore that. It's going to be more than 13 cents. I can guarantee you that. In fact, I'll check my math on that real quick while I got you guys here. 73.93 divided by 74. Yeah, that should be right. It just hasn't been much premium to collect yet. So let's go to IWMY. These guys sold 735 puts at the 21.30 level for $12. We'll just call it 12. 12 minus 21.30 is 21.18. So 21.18 is our break even. That's the number we're rooting for. I always do that. Let's get a live update going. See if we're out of the money. Oops, wrong way. What the heck is going on here? Okay, so no, this one is slightly in the money. This one is 14 points in the money. They're trying to make 900,000, but right now we're losing 150,000. Well, let's go check out the chart and see what the heck's going on. Oops, there we have it. There we have it. Although I will say, oh yeah, charts are 15 minutes behind. When the spreadsheet's 15 minutes behind. So when the spreadsheet last pulled data, we were underneath the profit box. Now in real time, we're back inside the profit box. So this would tell us, this would show about a quarter profit if the spreadsheet's updated live. Maybe someday I should invest in live quotes. I don't have to keep explaining that. It's probably not too much. It's probably like 10 or 20 bucks through Google Finance to get live quotes. So anyway, I'll look into that. But we have a profit right now if the market was closed right now, which is just what the spreadsheet tells you. It doesn't try to project what the profit will be. It just tells you what the profit is. Oh, also it's ex-dividend day for the Defiance stocks. It's a good day. If anyone wants to buy some shares, it's a good day to pick up shares, because they're about 5% cheaper. They aren't really, because all they did was, for the current shareholders, they put the money in the person's bank account and then knocked the price of the share down. So the investment isn't down today, but the share price is down. So if you want to add some to your collection, now would be a good time to do it. All right. I really like that SPY team. I mean, it's not that I don't like QQQQY. The only thing I don't like about QQQY is how it doesn't give much upside. It's great on the downside. People don't realize that. People are always saying it's super risky. No, it's actually less. It's actually the least risky one around. And no one believes me. No one knows it. And we haven't had a crash yet. Well, these things have been in existence, so no one believes me. But they actually offer the most buffer, and they are the least risky. Their risk comes, triple QY's true risk comes in the not gaining ground very fast side of the equation. Now, both sides of the equation go into total return, how much you lose when you go down, how much it's all part of the equation, but these things are safe on the downside. But SPY-T, not as safe on the downside. SPY-T, when we get a market crash, SPY-T is going to be down a lot more than or I don't know, a lot more, but be down quite a bit more than triple QY. Triple QY will be down the least of any of them. And JEPI and the Defiance ones, the single, the zero DTE. People don't realize that, but you watch, it's true. The closest thing I could show is evidence, and I just looked at it last night. I might even still have it up in one of my tabs. No, I think I got rid of it. But anyway, the closest thing I could show of evidence is these Defiance funds opened in September, right? Like September 19th or something. Anyway, by October, by Halloween, the market was down 10%. The broader market, I think the NASDAQ was down a little bit more, but the broader market was down 10%. Well, guess what? These Defiance funds were down 5%. That, we're like the JP Morgan, the best fund in the world for these covered call funds. I really do think all around, probably JEPQ is the best one. If I had to put all my money in any one of them, it'd probably be JEPQ. But the mighty JEPQ dropped like 8%. The Defiance funds dropped 5 or 6%, and the market dropped 10%. That the Defiance funds have hella buffer, and people just don't realize that. They hear the word zero DTE, or also they hear the word naked put and they think it's dangerous. The naked put isn't particularly safe either, but the thing that people don't get is no more dangerous than anything else you invest in the market, including the SPY. In fact, the SPY has identical risk to the SPY. So anyway, let's look here. I got off the track a little bit. Let's look over here at JEPY. All right, JEPY looks like the profit boxes are a little off. I'll work on my profit boxes later. They're off kilter. In any event, this profit box must be like that. Anyway, so that'd be like a 3/4 profit right now. So we can go back to the spreadsheet and see what the actual profit is. But I'm going to say 3/4. This will show us how many points we're in the money. Okay, we're 5.29 points in the money. Or the person that bought us is 5 points. The person that bought the put from us is in the money. Whenever you talk about in the money or out the money, you're always talking about from the person who owns the options point of view, not the person who sold it. All right. Well, anyway, so we sold this option for 18 points. Right now, it cost us 5 points to buy it back. So the difference is what we're making. We're making 346, which earlier I said was about a 3/4 profit or 2/3, and I'd say that's close. Like I said, remember this is 15 minutes behind, but right now we're at about where we're at right now. Right now we'd be about at a half profit. Pretty easily at a half profit. Because these quotes are live for some reason. Guess I just need to have Google Finance pull the quotes from here. Google Finance is already programmed to work with Google Sheets. I don't know if I can make Google Sheets work with TradingView. That might be a workaround. All right, let's look at the single names. I'll let you guys get out of here. Okay, so Tesla's back testing this breakout of this wedge. I call this a bull wedge, maybe, and it broke out, and then it back tested it. But hopefully, we don't get on the other side of this. Hopefully, this is about as low as it goes, and then we start heading up and to the right. So I watched Retire on Dividends video this morning, and these two were right. My NVDA, I had one of the strike prices wrong. All right, so that's for Tesla. That's pretty good. It's pretty good out of the money, I think. Because I just couldn't believe this week right here. I was fine with this week. I was fine with this week because on Friday before this week, we were down here. So, it's a little bit out of the money. But on this Friday, we were right up here and we wrote the same strikes again. I didn't get that. I think I know why it is. I didn't really ask Jay about it enough. I asked him a little bit about it, but anyway, this week they did good. They wrote the options ahead of the price a little ways. Was that 174, 184? We'll do a quick calculation on the fly. So 10 points out of 118, it's like 3% or something, 2.5% out of the money. All right, that's for TSLY. Here's for CONY. CONY trades coin options. So for coin, these guys sold an option right where they're at. I almost think this one might be wrong, but I kept looking at it and it's right. But they have the 285. The primary option is the 285 for CONY. You could see last week they were down here and they wrote this option. Then they were here and they wrote this option. Now we're here and we're writing this option. They try to write the option a little bit ahead each time. That's what allows the NAV to go up. And we've seen a lot of NAV going up in CONY. Look, CONY started at $20. It's at $30 right now. That's incredible. These aren't even designed to go up, and this fund's up 50%. And I mean, these aren't designed. These are designed for income. If they do go up, it's kind of like a pleasant surprise, but it's not how they're designed. All right, so now let's look over here at MSTY. MSTY trades options on Mr. And this one actually opened down a little bit this morning. It has a small gap down from where we closed Friday. Interesting. All right. Well, anyway, I think we have 3 options on this one. Yeah, look, they got their strike spread all over. This one has the highest IB. The higher the IB, really what Jay's his kind of stock answer is they let the market set the strike prices for them. They just go where they, could get enough time premium. Wherever there's enough extrinsic premium, as volatility goes up, extrinsic premium increases. So like in MSTY's case, they have tons of extrinsic premium. They can write options way out of the money. I think that's what Jay would say is this option right here and the real close to the money TSLY options he wrote, 2 or 3% out of the money, and these are maybe 10% out of the money. They have the same economic effect. I bet they on a relative basis. I bet that because that's what he's going for. He's going for income, and but he's also as a secondary goal. He's going for NAV appreciation. So he'll just choose the strike that's as far out as he can get, but still meets his income goals. He calls that getting his bogey. In the office, they call that getting your bogey. But anyway, okay, let's see. Have I looked at all of it? What about NVDA? I've been talking so much this morning. I woke up in a talkative mood. Yeah, this one they have 3 options. And I made these options last too long. Look at this. Holy cow. I made these options like 3 weeks long. It goes out to Friday, but that's the next Friday. We need it to go out to Friday, Monday the 8th. Yeah, these options just go to here. What I was thinking last night. That would be like one of JP Morgan's options. They use monthly options. These guys use weeklies. So in any event, let's look and see. Now you want to talk about out of the money. Look at this one, this 1,000 strike or 915. So what is that? 85 points? No, it's not 85. 15 minus 100. Yeah, it's 85. All right. So 85 out of, we'll call that 10%. It's not. We'll call it 8%, 8.5% or something. Well, that's way out of the freaking money. That's way out of the freaking money. All right. Is it too early for the buffer report? And also, like be careful today that when you look at your names like Triple QY, it's not really down 4.2%. That was the dividend. The NAV's down that far, but the money's in your bank account, so the investment's not down that far. I never know what to do on these. If anyone knows in the comments, let me know. Some charting packages correct for this automatically. So even though it's down 4.2%, the charting package knows the dividend came out, and it won't give you 4. It'll give you the changed amount as if that hadn't come out, just on this one day only. Some months Triple QY does it, and then some months I have to adjust by hand. I bet Corey, I need to have a talk with Corey about the best way of handling dividends, because I know she deals with it, and we've never had a direct conversation about the dividends. But so it's probably really too early for this to be useful. I guess on a 30-day basis, it's still useful. We could always look at that, kind of get a general 30-day idea of how things are going. Because on the 30-day, the 4.2% is not as noticeable as it is on a single day, on a 1 day. Well, look, so this one has it fixed. Okay, 4.2% is saying that Triple QY is up 59. Well, sometimes I just have to check. Well, these charts are behind and stuff. We'll worry about the buffer charts later. How about I just let you guys get out of here, and I'll come back at lunch. We'll see how everything's doing. Let's look how everything's doing today. NASDAQ's up 65 basis points. ES or S&P's up a little bit, and Russell's actually down. This is 24-hour futures. On 24-hour futures, there's Russell, there's S&P, and there's NASDAQ. NASDAQ's the strongest of the bunch today. 10 years popping. Oh my gosh, look at that. I wonder if that's helping old Tress out. Tress trades 20 years bonds, but it did make Tress's price move, or TLT's price move. All right, well, let's see what else is moving. Let's see what else is moving. VIX of VIX is up. Jay was talking about this the other day. You heard me ask him about this. This VIX of VIX, which is VIVIX, which is the volatility of the volatility index. This is a derivative of a derivative, probably of a derivative. I think VIX itself is a derivative, but anyway, this is a triple derivative. This VIVIX is. It's a good early warning sign whenever, it can be a good early warning sign. Sometimes it knows nothing. But what generally traders look for, and I bet this is what Jay looks for. I need to play the video again. He told me something to look for, but what I look for is I look when the VIX, the VIX of VIX starts popping, but the VIX itself has not started popping yet. That's a sign that there's something going on under the surface, and sometimes it's an early warning sign. So I don't know if this pop means anything today. I really haven't been watching the VIX of VIX that much. Friday, March. So let's see. Let's look for March. So the VIX of VIX for March is basically unchanged. And it did pop up here to 96 and then settled back down. I think Jay's thing was when it's under 80, when it's under 80, times are good, and we should keep going up. I mean, under 80 is bullish. It over 130 is bearish. I think that was his system. He said, he said when it's under 80, the forward returns will not be as good. I didn't know if he meant the forward returns of VIX or the forward returns of the market. I bet he meant the forward returns at VIX will not be as good, which means the forward returns of the market will be better than average. All right, guys, you guys have a great day, and I will be back at lunchtime, and we'll see where we're at. We'll see where we're at. All right, guys, take care.